One day after the Reserve Bank of Australia opted to leave interest rates unchanged at a cash rate of 3%, it has been announced that RBA Governor Glenn Stevens will serve a further 3 years as leader of Australia's central bank. Australian Treasurer Wayne Swan made the announcement to reporters today as the government seeks stability just 5 months before an election. Stevens' 7-year term had been set to end September 17th, just 3 days after the federal poll. The decision will prove popular with advocates of Stevens, whose 4.25 percentage points of rate cuts helped Australia avoid recession during the global slump of 2009. Since taking the helm in 2006, Stevens has extended the country's recession-free era to 21 years, keeping the inflation within the RBA's target range and employment in the world's 12th largest economy near 5%. While simultaneously attempting to rebalance a two-speed economy, as mining regions thrive off Chinese demand while manufacturers struggle under the strength of the local currency. However, the governor has come under criticism for a lack of transparency within the RBA. Most notably last year, when the governor was forced to testify to a parliamentary panel over corruption allegations at the RBA's note printing units. The bank has sought to address this, however, now releasing minutes of board meetings and policy statements to explain the decisions made at its monthly meetings. While many consider the reappointment a means of preventing the RBA governorship from becoming an election issue that risked unsettling investors in the pre-election period, opposition Treasury spokesman Joe Hockey said the Liberal National Coalition should have been consulted, stating that a consultative phone call would have removed any perception of political game playing by the government. Governor Stevens will still have several challenges to face during his additional 3-year term, including a stubbornly high dollar and stimulating growth in underperforming parts of the economy. The currency was little changed after the announcement, with the Aussie dollar edging higher against its US counterpart following the release of mixed data reports. Official data showed that Australia's trade deficit narrowed more than expected in February, hitting 0.18 billion Australian dollars from a deficit of 1.22 billion dollars the previous month. Analysts had expected the trade deficit to narrow to 1 billion Aussie dollars in February, while a separate report showed that new home sales in Australia fell 5.3% in February, after a 4.2% increase the previous month. That's all we've got time for right now, but stay tuned to Dukascopy TV for more exclusive interviews. Goodbye for now.